Mode.
Hey there, traders. Jamie Saettele here with your midweek webinar with SB Trade Desk. It is May 21st, 2015. So let's begin. I had, three main topics. I'll, take questions towards the end, but I had three main things that I wanted to discuss. One was kind of slope, some questions we've gotten recently on slope. Slope analysis tips, basically, right? I'll give you some examples as I go through that. In other words, it's brought to my attention that it is quite subjective, but there are rules and there are, guidelines that I do like to use. So hopefully that will help. Two, I want to talk about crude oil. Recently, and not just recently, but over the last few months, crude's been, it's the anti-dollar trade, right? A lot of people talk about gold as the anti-dollar trade. It's really been crude though for some time. I mean, think about what happened last year. With the huge dollar rally, crude just fell apart. Pretty much the same trade. And if we watch how crude trades at important technical levels and see, kind of what it's doing, it might give us a little leg up on finding the next move in the dollar. And it's a good day to talk about it, considering crude is up almost 3% right now. Dollar's, not doing a whole lot. I mean, the euro's up slightly. Commodity currencies not doing a whole lot. CAD's flat. Aussie and Kiwi are up very slightly. Pound's really the big mover. So we'll look at crude. And finally, I want to look at Kiwi Crosses in general. Kiwi is very interesting in where it's trading right now. Big picture, we still have that huge bearish wedge target all the way down near 66. But near term, we could see a pretty decent sized bounce in Kiwi from, more or less the current level, maybe slightly lower, but we'll look at that. Okay, so the slope analysis. So there's two main points. One, I'm not all that fond of using spikes. Okay, and typically news generated spikes, right? So I'm not all that fond of using spikes in general as one of the three pivots to draw a pitchfork. And this is kind of true actually for any technical trend line method, right? Trend lines, just simple trend lines. A lot of times, if you draw off closer to not necessarily the extreme point, okay, in the move, not necessarily a spike, but closer to say where the closing high for that move is, or the closing low for that move, it helps sometimes. But that's kind of number one. But the main thing is that you prefer to see evidence of trading on the proposed slope, and it doesn't have to be the median line necessarily. A lot of times you get trading around the median line. It's the sliding parallels that you want to look at. Okay, so we're going to go through several examples here. Let's take a look first. I want to look at pound dollar daily chart. Okay, so get rid of everything. Okay, so pound dollar daily chart. All right, so if we look at these three levels here, right? The pivots, right? Where's the big high and the low? Here's the low. Here's the high. Here's the low. So if we draw that, again, right here to here to here, we get a decent looking, structure. I mean, there's decent trading around parallel, right? But we can do better. And, if you remember this day, this is March 18th, right? This is the high and the low for that whole move. What we had here was actually, a super kind of a dollar flash crash spike, right? And this is not necessarily a place something you want to use. For one, this price up here, I know that on the CME and futures, for example, there was actually a lot of trades that were canceled when that dollar did that. So different platforms might have fairly different prices at this high. So one of the tricks you can kind of do is to actually put a line chart up and look at the closing price. Okay, a lot of times the closing price that day might get you a little better, slope to draw or to work with. So if we do that one, okay, for one, we notice a few things right off the bat. This caught this high pretty good, right? We went through this. That doesn't mean that you get rid of it. All that means is that the trend's pretty strong. Okay, and then finally, when we put up the sliding parallel that we wish to put up, say we put one on here, and this is one actually that you can see on the long-term page. That was pretty good as support. Now you can probably adjust it actually now, by putting it. What's going on here? You can probably adjust it by just putting it right here. And we've talked about the importance of gaps and everything, right? And drawing off of gaps. So tip number one is, don't assume that the highest price for the move or the lowest price for the move is going to be the one you want to use, especially if it's in so-called, spike fashion. Tip number two is to look at the closing prices, okay, for the, for the move. And really, the most important thing is to see how the market trades around, around the sliding parallels. In other words, is there good action on that plane, right? Just like horizontal support resistance, right? In which prices will come and hit a certain level a number of times and rebound from them, or decrease from them, and then eventually break through one way or the other. It's the same thing with slope. Okay, you're looking for price to touch that specific level multiple times. All right, nothing all that difficult about it. I mean, you do have to play around with it. You do have to do a lot of work. It's not easy. It's not just a system. You can combine these things. Like this is, you can see here, this is more of like a system. And this is something I'll look at. This is a trend-based, this is a trend-based system. Basically, it's, if we look at pound, for example, this is the one we've got right now. I just showed you that one, but you're looking for uptrends to find support in uptrends, and we got one here on this pullback on the 19th on Tuesday. Pound's actually one we'll get into in a second, but pound is one, obviously. I think it's going up to 58.78. Check out the long-term chart page. So I think we still have 200 points more on the upside for pound before you get a deeper pullback in cable. Stefan asking, is your rule 3 hits on a line is a trend? Well, I think I know what you're saying. So you're kind of asking about, how do you know, that it's valid, I guess. Let's just take this pound dollar example, right? So we're coming into, say all we have is this right here. Okay, now at this point, say on Tuesday, the market comes down and it hits this level. You don't really know, whether or not that is valid. It's like the second time you've really touched this level, right? So it touches it, but it holds. And then the next day, yesterday, it holds again. Okay, so, you have a 2-day hold. So it's not, it's obviously not random, or, there is some sort of significance here. Clearly there's some sort of significance on this line. If the market can fall this sharply and just stop and hold for 2 days and rally, 54.40 over 150 pips basically. So that is, kind of where you'd be saying, oh, wait, maybe I should do something here. Maybe I should look to do something. Now, at this point, we've established that, moving forward, we've established this line is pretty good support. Okay. Now you could get resistance up here. Don't forget that. All right. Remember, this line was resistance here too. It's resistance within an uptrend. But if you did get resistance up here, and we'd be looking for to buy, okay, any pullback again on this line. It might not be till next week, but we'd be looking to buy any support again on this line. Okay, and then when you can combine it with your more traditional so-called horizontal support resistance, right? Whether that's just former highs and lows or fibs. In this case, we've got 55.50. It's the high from the 26. If I add in here, I don't have it, but if I add in here the year open's actually right 55.80. Okay, so that would be right there. That would be the year open. So that gives us kind of what we're looking for. Now, if we move forward, if I do an example in, say, right now, like something we're looking at to enter at this exact moment, euro dollar for one. This is a chart I posted last night. I don't think I put in the report. It's on the Twitter feed. But remember this slope. I mean, this is still obviously very useful. Old resistance, right? Has been interesting as support the last couple lows here, yesterday and then last week on the 11th, on the 12th. And there's two slopes to work with, and I talked about this in Tuesday's letter or post or whatever. But if we are using this one, okay, it may be that we have a low in place right now, right? And we'll talk about which one is the better one to use here in a second. If we're using this one, we might actually leak a little bit lower over the next 1 to 3 days into, say, this is 10:20 tomorrow, 10:40 or so on Monday, right? So how do we know which one's better? Well, look, at this exact moment, you don't, there's no right answer. Okay, I know that's kind of annoying, but if we look at, let's try to figure out which one had. So remember, we're throwing this one out right here. This one's thrown out because that was the 18th. That's the spike. We don't want that one, right? It wouldn't really work anyway. Okay, so we move to this one here. And we look at the closes. Actually, the highest close price is actually on April 3rd. It's actually over here. It's not very, it's not a huge difference. We're talking 109.70 to 109.73, but let's see if we have parallels that provide, some sort of, differentiate between these things, right? All right, so with this one, it's okay. That's all right. I mean, you just have to ask yourself, is this describing price action, right? It's okay, but it's not great. Okay, I mean, it's nice that we've rebounded around this level, but again, not especially precise. Now, if we take a parallel off of this one, it's a little better, right? Extend it off here. But this is the one that seems to be describing price action a little bit better, right? And you can see why. You can see that if we draw this, extend a parallel from back here, this high, which was former resistance, okay, you can see how good that was as support. So that was really good support here on May 5th and really on May 12th and May 11th. All right. So, one way to do it, like I said here, is to check the close, because what that does is, again, it kind of eliminates, the spike for you, right? So it's really kind of the same thing as tip one, which is eliminate spikes. I mean, eliminate spikes and eliminate and look at the close are almost the same thing, kind of different ways of saying it. But yeah, the biggest thing, and Stefan's right on, man. The biggest thing is which line, if you will, or which slope best describes what's happening. Okay, and there's another one here. Look, if we take this one, okay, and we extend it from this high here, I mean that was spot on this level. Okay, so moving forward, this is probably, and markets are constantly changing. That's why we constantly have to change our charts. This is a very imperfect. Business. Okay, but we constantly have to change things. That's just the nature of the game. But if we're looking at trading euro going forward, which we are, then this might be where we trade. Okay, on here. All right. Now, let's say that the euro does not come down into this thing tomorrow or Monday, which is just very slightly lower. Let's say instead that it rallies, up into here. Where, I want to be long euro because, and on a bigger picture basis, I should say, I like the long euro idea for several reasons. But one is obviously when we look at, I put that chart up over the weekend. This line here, right? And this is obviously looking far out, but this is a weekly chart, okay? And I'd say that this slope, this is the one that goes off the 2008 and 2010 lows, and it, more or less, I mean, we're talking about a decline of like 35 big figures, okay? From, almost 140 to almost 104. So that's a heck of a decline in a short, relatively short amount of time. And, it was fairly precise as support. Okay. And so the next level that we look at potentially, is what best describes this broad downtrend. Okay. So it's down, sideways down, but what best describes it? Well, we have the very precise touch points going on here with this line, same slope, but January low 2011. And that is, I believe, the entire 2011 low, very close to the 2012 January low, of course. Scroll in, bounce, and then the really big breakdown at the beginning of this year through that same line. That's why I think that this thing is going to be really special as far as a level to trade into. But again, that's all the way up near 116. It's above 116. So we're trading near 111. It's 500 pips away. So I want to be long for a move into that level. I just don't know if that low was yesterday, right? Or if we dip a little lower. So if the market starts to rally, the euro that is, starts to rally from here, all right, and hold up, fairly well, then what we're going to do is this. So here's our hourly chart. Okay, I'm going to put a candle chart up so that way you can see the closes better. Ow, just hit my foot. So I said this morning that the euro is trading between two high volume levels, right? And it is. You can see this circled area here, right? That was the Tuesday 4 a.m. New York time bar, in which some dude from the ECB comes out and says that they're going to front load QE. Okay, get it? Great, fine, whatever. Anyway, the euro tanks, and anyway, that was massive volume. A lot of times you do not even need a chart with volume on it to tell where the big volume was, because a lot of times it just looks like this. It's a huge bar. Okay, the next big bar, of course, was this hour right here, that's the FOMC minutes yesterday. And, using this as basically a pivot, so to speak, all right, go here. Using this as basically a pivot, in other words, the market, broke through on the upside, it's come back and tested it. If we hold up the rest of today, then I would be willing to put, a euro long position in probably at the close of this bar here, which is the 11 a.m. bar, which is into Europe's close, okay, near a 111.20. And I'd literally be willing to put a stop at 111 like 03, okay, risking like 17 pips for a move higher, okay, just because I think it would be worth it considering the upside potential, and risking that, a small amount of tiny pips is not really that big of a deal in my opinion, but whatever. That's what I might be looking at. So what you want to see is the euro, again, trade up into here. If you want to be a little more conservative about the whole deal, then you might want to wait until the market breaks above this black median line. And there does seem to be obviously some sort of influence here. This describes a really short-term picture at the moment, given the responses we had. In fact, just this morning we had one at 7 a.m. And finally, this one here, right? So a break above here would indicate a break of two short-term bear trends, and that would give you the ability to turn bearish on any sort of, well, not bearish, but turn bullish on any sort of dip, or just turn bullish on the break above with a tight stop. Okay, at that point, you'd probably be looking towards, again, 112.60, 112.90 as resistance in euro. So that's where we are with euro. Let's see here. Mark says, so when you actually decide to enter a trade, 60-minute time frame, make your exact decision where to enter. Yeah, a lot of times, Mark, what I like to see is the move off of the proposed support or resistance area. Like if we let's look at the pound, for example, right now on that. So here's pound, right? I believe this is roughly the same chart that was shown over the weekend. So pound dollar. Okay, we had the weekly chart here and the daily chart here. We're talking roughly 55, give or take. That was the big one, obviously. A lot of times you look back and it's like, so we came into this, right? A lot of times I look back and I feel like I'd probably trade even better. Like and have to do like half as much looking at the screen if I just looked at the weekly chart only and put orders at the levels there. Because so many times you just see how ridiculously accurate some of these slope lines can be. And yeah, I mean, they're going to be wrong, fine, but that's what stops are for. But yeah, I mean, Mark, you know what I'm saying, man? It would be just put the orders on the weekly slope lines and maybe the dailies, and just go out and play golf or something. I don't know. But so here we've got this big response, obviously, off of the weekly chart and the daily chart. So we've got a lot going on here. So then, yeah, you go to the 60-minute chart, or this is a 240, but if I put up a 60, and we clearly have, a series of, this is impulse here, right? So at this point, you can most certainly one would think, put a stop under 55.20 in order to get long, okay, in order to protect yourself. And I'd be watching for support now along this line. All right. And this is actually what's known as the shift method here, where you just draw. It's basically the same as a trend line. It's the same thing. Okay. So if you were to take that and just put it, along this line, that's where you're looking for support now. Okay. So you can probably just get rid of all this. So you're looking for support at this line, which again was former resistance here, spiked above, pulled back, breakout through it. So if we end up getting, some sort of a pullback into, let's see what tomorrow's the 22nd. So during European hours, the thing's about 56.30, right? So you'd be looking around that level, 56.30 in order to take it higher again. And again, with pound, that 58.78 level is going to be awfully big. That might be where you get a deeper pullback from in cable, 58.78. All right, so yeah, as far as the short dollar idea setting up, obviously pound is leading the way. All right, I want to go back quickly to the tips and slope tips, right? So I had a few others that I wanted to look at. Crude was one of them, and Euro Yen was another one, and then dollar CAD 60-minute, because we were talking about that yesterday on Twitter. Mark and I were. All right, so let's look here. What do we got here? Euro, Kiwi. Okay. All right, so if we take a look at crude oil, all right, so similar stuff here, right? Crude oil, this is one that's a little tricky, because again, here's a spike. Okay, here is a spike. Okay, not necessarily the one we want to look at right here. Okay, and the reason I wouldn't look at this one, even though you could make an argument that this actually describes the slope relatively well, the reason I wouldn't look at this one is that you haven't hit the median line yet. Okay, what you do want to see price get to the median line or trade around it, because then that gives you basically reason to look for support either on the lower parallel or on, or on the sliding parallels. If we look at the close, this is the highest point, 217. Okay, so this is one that we're going to work with. All right, but what I want to see now is I want to see if this thing describes, again, if it describes the market. Well, it doesn't really hit anything. This one, well, that one's pretty good, right? You support, kind of resistance, not all that great, but that was certainly really good resistance. Okay. Here, off of this one, didn't quite get it today, but this is definitely one to follow, right? So this is futures, okay? So this is going to be July contract now, so you might be seeing slightly different things if you're looking at the CFD, the CFD contract, but this is actually a decent one to follow. If we put these on here, let's see, is that catch? Well, it's okay. Again, this is one to keep on the, to keep on your charts, right? This is one to look at. as far as crude oil is concerned. Now the other one, the one that I'm kind of, I guess, favoring at this point, would actually be this one, which goes from this high here, which is the February 9th high. Okay, now it's not the highest close, but one reason to favor this, the slope on these is actually slightly better, that it touches all three of these. If we zoom into this one, you can see that if we extend it off here, okay, and you look down, you actually don't hit these, okay? It does hit the high here, which is nice. It doesn't hit those. And so if we look at this one, it hits these levels, and it's a little closer to getting resistance on these levels here, all right? It's also in line with these 2 points right here, okay? Finally, if we extend it from this low here, this ended up getting the low on Tuesday, just like the pound dollar one did. All right, so this is the one, in my opinion, to follow closely. And just, again, similar to euro, right? If I look out at a weekly chart, it's not a coincidence that these dollar moves are are coinciding with on the charts, I should say, are coinciding with crude. When we look all the way across the support area, okay, this slope here extended off 2010 lows and 2011 lows, right? That same slope extended off the highs back here in 2012 was really good resistance for for the top. Extended off of the low from 2009, pretty good support. I thought we might have the low here. We went for one more visit, obviously, and then that was it. But what you're going to watch now, the long-term stuff, is this line up here, up near 67, 68 bucks. All right, and that that could be over the next few weeks. Okay. So we're getting a period of consolidation here after an uptrend. We got here, I said, nice correlation of crude with euro. Absolutely. Crude's actually kind of been the leader lately, right? It's kind of been leading euro a bit on the upside and the downside. Remember last week when euro was at new highs? Late last week, and we had crude breaking down already, right? Put that up right here. Let's see. Okay. Euro. Right. So this was, you can see here last week. Crude is in black. We had euro new highs. Crude was actually coming off, and just now, in the last day or so, basically the exact opposite situation, in which the euro is coming into new lows while crude was rebounding. So, for me, it's a pretty good indication that maybe we should follow crude oil pretty closely here, as it's making a move higher. And we might want to look at getting long euro. One thing to watch out for, and again, that lower area in the euro, down here, if I look at this blue line, right? We might get there, okay? We might trade all the way up. We might trade up to 1260 first, okay? And then we might try for it or something. One thing to think is that this impulse here, as crude's finishing off an impulse on the upside, okay, it goes into a little higher, slightly higher levels. We might get a rally in euro with that, and then might get a downdraft that, that so-called quick stop out, stop run in euro dollar on the downside, as crude makes a three-wave correction. Just kind of something to think about from a timing perspective, right? And I mean, if you don't want to be all that precise with the timing, you just want to trade with much larger stops, that's fine. It's up to you. The way I go about things is I am much more comfortable with really tight stops. Once you finally get that hit it, and you have a nice levered position. Okay. All right. So that's with euro. All right. So what else do we have here? I think I wanted to talk about. I kind of already talked about crude. Oh, Kiwi Crosses. I want to look at Kiwi Crosses in general. So, all right. So Kiwi Dollar. Let's start there. All right. So first off, from a slope perspective, look, on the long-term stuff, this thing worked out pretty well, right? Kiwi is coming off. It's been far from a smooth ride. But we're at a level now where within the downtrend, you may very well see a bounce. Maybe at least above 74, maybe higher. Okay, one thing to consider, remember, we've seen this a couple times recently, actually, in which you get the so-called space, right? We had it with dollar Swiss last week, and that really warned of the dollar turning back to the upside. If you forget what that was, I'll show you, because it'll make more sense what I'm about to tell you right now with Kiwi. So remember last week we had this median line, right? But then look what happened here at the final low as it turned out, right? That low never made it to support. And again, you wanted to think about that like divergence with momentum or with RSI, which we actually ended up having anyway. Again, you had to look at the close price to get that, right? Talked about this last week. You had the close price, okay, new low and close, new high in RSI. Or not, I should say not new high, but not a new low. So you kind of had a double whammy with divergence there. I won't go to where we are right now with dollar Swiss, but this could be a three-wave correction on the upside. In any case, what we've got with Kiwi is kind of similar. You can see here we've got, see this one here, support, right? This fairly steep lower parallel. Okay, get the lows down here. Last week, we got that crazy move up, which ended up stopping right at the upper parallel, the same thing, same structure. And then this low is not anywhere near this level. So that gives us, again, it gives us a space. And what it warns of is a move higher. Okay. Now we also do have support from this lower, or from this median line. Okay. And we're using this high here in March, this low here in March, and finally the high up here for the move, which is April 29th. So, this median line's been pretty good as far as offering opportunities to trade on both sides. Obviously, you would not have known about it at these levels. That's not the point, though. The point is that this describes the price action, describes the turning points very well. All right, and we're at one now. So the fact that we've turned up today, we're making an up day today, and 72, 74 you can't dismiss a visit there, a spike below, especially on a Friday, right? That Friday low tends to be something. We had it last week, Friday high in euro, and then it comes off all week this week. So something you might want to watch for in Kiwi is a 72.75 area. I'll put that in tonight's update. But I do think the next move may very well be up into at least 74.20s, if not higher. Because what happens when you make a space again, the gap between the support area and the low, that warns that upon visiting resistance the next time, is that it's going to break it. Okay, so we might be in for a move up to this line, the red line, which would be the bigger sell line anyway. All right. Obviously, that gives us a lot of room on the upside, though, for possibility for potential Kiwi strength. And finally, with the Kiwi itself, there's other Kiwi crosses that actually look kind of interesting. So Euro Kiwi, again, going way back here, right? Going back to late 2013, we had a big top up here. Using these 3 points, okay, the 2013 peak in August, using this low in September 2013 and this high on December 2013. Again, if you don't have the shift method on your chart, just do this. You can just draw the trend line, okay? It's the same thing. Then you can extend the parallels with the trend line, okay? But point being is if you make a parallel to that line, extend it from the highs here, well, it's gotten pretty good peak here so far. I guess that was Friday. Was that Friday? That was this week. Yeah, that was this week. That was the 18th. So we have a Monday high here in Euro Kiwi. Okay. So we're at pretty big resistance as far as Euro Kiwi is concerned. We've pulled off of it. Then we can zoom down into the short-term picture, 60-minute chart, and guess what we have? We have a beautiful short-term fork to work with. And, I might add, a possible head and shoulders pattern, okay? Which if that were to play out, you could end up seeing a move all the way down into, look at that. You see what the target for that HNS would be? By the way, if you measure an HNS, I measure them by just taking, I know you're supposed to do, textbook, you just do where it would break the neckline. So you'd be measuring basically from like right here. If it broke over here, you'd measure here, okay? But just to get a sense for where it might happen, what you want to do is, just take the leg. I take the shorter of the two legs. It gives a conservative estimate because that way you don't run the risk of, not taking the target. But if we were to do that here, okay, it gives you a target of 47.13. The month opens 47.17. So that's pretty cool. And it's not far from over the next few days, really not far from this median line here, which is kind of strangely drawn, but I like it because it does cross through the gap. And again, gaps are important with respect to price analysis, right? So it's not just highs and lows that are important, obviously, it's also gaps. What happens around the median line is important, and if there's a gap around it, then you can kind of chalk that one up to being fairly important. So let's go to the short term now. Hourly chart, like I said, we've got that here, and we've got a pretty sharp decline. We've got, I don't know, somewhat of an ugly advance overlapping, so you can make the case certainly that's corrective. Irrespective, you want to look for resistance up here again, okay? I've talked about, obviously, daily reversal levels, weekly reversal levels, all that stuff. at various times throughout the last number of months. And you know what it is. It's just the high level, the high close or the low close for the period that made that. So you can do it with hourlies too. In this case, the hourly level is 52.47. So we could put an order in to short at 52.47 with a stop at say 50. You might want to give it 59.10 just because there are spreads that blow out with crosses like this sometimes. So you're talking, let's call it 60 pips. Let's call it 60 pips of risk. Kiwi pips, that is. So where's Kiwi trading right now? So 60 pips, 73, it's like 43 pips or something, right? So it's like $43 pips. So we could talk about $43 pips of risk on a short into 52.47, targeting 46.17. Literally have like a 10-to-1 reward to risk trade right there. Okay. Finally, another Kiwi cross. Actually, I got two more Kiwi crosses. Got one here. Let's see. Aussie Kiwi. Or look at the daily chart here. So Aussie Kiwi, I'm pretty convinced here that Aussie Kiwi's turned the corner as far as a pretty big low being in place. And, again, same principles here, okay? Using the pivots back here from 2011 August, December 2011, you can see this is definitely a good slope to work with, okay? But again, we've got the space, okay? At the last low, we didn't get into the support area like we did down here. So again, that's like a divergence, and it tells you, look out. It's a weekly chart, so it has pretty big implications. But in the near term, or a little more near term, is we go to a daily chart. This is just a simple trend line, okay? And it was pretty clear as resistance in January, and it was also resistance last week. All right. So, this implies to me a pretty good response up here, reversal bar after, that gap, and I'd be looking lower on Aussie Kiwi here as well. Okay, this doesn't mean that you trade like every Kiwi pair. The Euro Kiwi setup looks really nice. That might be something to trade because it has really solid defined risk on it. It just gives you more conviction though, right? As far as if you look at, like, if I'm looking at Kiwi Dollar and I'm like, this is an area where we could very well, see a pretty solid bounce of like a couple hundred pips. Then I've got, Euro Kiwi doing what it's doing near term and long term slope. And then I've got Aussie Kiwi doing what it's doing right here at this level, long term, resistance and all that. Might be in for a dip down to 105.30s or something like that. I'd be looking for support on this lower parallel here. And again, why? Because it's a strong uptrend in the near term. We've gone through the upper parallel. Okay, so that implies that you are going to hold support on the way back. Okay, if we were to stop over here, it's a little different. It's a weak uptrend, but in this case, you're going to look for us to find support at 105.30. So Kiwi itself might be a pretty decent thing to trade over the next number of weeks, higher than lower potentially. I do have to add that the Kiwi's got a hold here. Okay. The Kiwi Dollar, if we start breaking down into here and we close down here tomorrow, I mean, I wouldn't want to be constructive on Kiwi, okay? But where we are right now and holding as we are, not a bad reward to risk ratio here on the upside. It's Aussie Kiwi. Finally, we'll take a quick look at pound Kiwi, which is obviously broken out to big time levels. Remember, this is last week's webinar, I think, talked about the possibility of a pullback into 208 area. We did get 208.16. This thing is, pound Kiwi is pretty crazy, right? So we've got pound Kiwi finding, support here on the parallel, breaking out to new highs. I would be wary of a pullback again fairly soon here. And one reason is the momentum. Oh, one thing I wanted to show you, here you go. You can see we've got, this is a 4-hour chart, but this is another thing that kind of supports potential Kiwi bounce. You got a pretty big divergence going on here, right? And this is, again, the one to pay attention to, because you've got the RSI on the at the new low is, it's above 30, right? So it's a so-called reliable one. So we'll look at that one. Let's see, Kiwi Dollar. Let's look at pound Kiwi is what I was going for. So pound Kiwi. We had this happen, obviously, with Euro here very recently, but you can see the drastic divergence we have, okay? From a wave count perspective, I'd be looking at something along the lines of like, 1, 2, 1, 2, 3, 4, and maybe completing wave 3 up here somewhere, okay? And then so that would imply several more pullbacks and advances. But again, that can be difficult, when you start to think like that. I mean, look what happened with the Euro last week. We were doing the same thing, right? We had this. This was actually this week, wasn't it? We were looking at 1, 2, and all the evidence was there that we were on the right track. 3, 4, and then we were going kind of, 1, 2, 3, 4, 5 as far as an ending diagonal is concerned. In this case, we could end up having something like, well, you could end up having like this could be triangle 4 over here. You could get new high 5. Regardless, I think it's good to know that there's support, potentially very good support, right down here. So that's where we're going to be looking. Did get I'll look at Euro again here in a second. DJ asking about Euro again. It did get a buy signal on the trends on this is a trend pivot system. You can see the blue dot right there. Got a buy signal. These are big. Big swing signals here. So, this isn't something where you're looking for a small move. You can see that they cluster at times, like they were clustering up here as bearish ones. They were clustering here as bearish ones, okay? Before the big drop. They were clustering here, here, here. On the way down, they were clustering. The last time we really had anything bullish like this, as far as the Euro is concerned, in which we went, and RSI, kind of gets into 70 and then pulls back to 50 area. The last time we had anything like that, pulls into 50 and holds it, I should say. It's probably like right here, probably all the way back in 2013, in which we go up to 70, pull back, get a buy signal. We got one like right here, same thing. Okay, so similar here, pulled back into, after overbought, pulls back into 50, start getting buy signals up here. So the point is, slowly but surely, we are getting different behavior in the dollar, right? we've seen that here, obviously, recently. Yeah, Mark says so much evidence. Yeah, the thing is too, Mark, just, to be, it's like we could be right on the idea, but wrong on the trade. That's, it's something happens quite often, unfortunately, lately. It does happen, seem to be happening all the time. But, if we're right that the euro could be going up into 116, okay, in 3 weeks, then, does you want to go long now? I mean, the risk there is that you're risking, you end up putting too much at risk. So, like I said, let's see what happens, how this happens the rest of the day. If the market can close back up here above this thing, it'd be a little better. If not, it might be best to wait for that Friday low tomorrow and look to get long right here at the 110.20 area, which is a confluence and could be absolutely beautiful for us to go long for a biggie. Actually, it's lining up even more than I thought. So that's one. The other trade that I love so much is the Kiwi, though. Here we go. I got some big questions here. All right. Good. You really figure patterns? Hey, Audio Eidos, what's up, man? He says, new here. What's that? Welcome, my friend. Welcome. What is the dots indicator using? Okay, so what these are, these little dots. No, these aren't B-band. What these aren't Bollinger Band. It's an RSI thing. So the best way to explain it would be it's like reverse divergence. So if RSI makes a new 20-day high, okay, but price has not made a new 20-day high, then what's going to happen is you're going to get a red dot, okay, and these things will get absolutely chopped to bits in choppy markets, but in relatively smooth trending markets, it's really good at like picking the top within the downtrend or picking the bottom within the uptrend. Okay. And sometimes you get several of them, right? I don't take them as like signals per se. I take them more as like it's, a bullish profile for the euro or it's a bearish profile for the euro, right? You can see that after a move up, you'll tend to get, and again, they work well in smooth kind of trending type of markets, right? Sells on the way down. Back in 2000 and during the uptrend, obviously in 2010, 2009, it was really good at catching the dips. So it's not by any means the end all be all. It's nice when you have it though combined with levels that we're looking at, which is always first and foremost is the levels. Okay, so we're looking at this here, which is the slope we're working with. We're starting to get these buy warnings, and that's kind of an interesting thing to make note of because we've got support basically right down here. Okay, so that's what that is. And then finally asking about the candlestick analysis and figure patterns. So I'm not one for necessarily looking at the pattern and giving it a specific name. I do like recognizing the fact that there's spikes there, right? Or that there's a large wick, okay? That's often indicative of some sort of support. So not, it's a much more general interpretation, I guess you'd say, of candles. Question. Let's see. When evaluating a Kiwi cross to trade alongside longer term, do you choose based on the best trade setup, or do you always go with the stronger counterparty, which may present the best potential, i.e. Aussie Kiwi versus Pound Kiwi versus Euro Kiwi? Right. So, Those that have been here for a while know that I typically like to trade the dollar crosses. Uh, you know, but if there's a very clean setup with a very high reward to risk ratio, then I'll take that. And the risk component being the most important part. So there's no set rule, but as it is right now, for example, I'd be willing to trade Euro Kiwi to the short side because of the setup, right? It's a very clean setup. We've got here we've got this level, okay? It doesn't get much cleaner than this. And that's saying something when it's a Kiwi cross, because these things are usually pretty sloppy. So we've got the very clean, almost pit perfect type of resistance. And then when we go to the short-term hourly chart here, we've got the presence of, kind of a rounding top, if you will, possible head and shoulders deal. And we've got very clean short-term slope to work with. So this is one that I would actually trade on the short side because it is so clean, right? With this Euro Kiwi. A lot of times I will shy from the pound Kiwi trade. It's just, it's a little too much for me, a little too erratic to wrap your head around. But yes, I don't know. To answer the question, a lot of times it is purely dollar crosses, so I might be just looking to be long Kiwi dollar. But when the setup's there and it's just you can't, it's too good to dismiss, then yeah, I'll take it. So this Euro Kiwi is one that I'll be looking at to put in an order tonight. And it looks good on basically all fronts here. I mean, shoot, you've got this corrective advance, overlapping advance, if you will. I mean, sharp drop, right? You've got a wedge type of deal going on here from the lows. This is a 15-minute chart, but you see what I'm saying? Wedge, 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 right? So sharp drop, wedge into long-term slope on the daily, short-term slope on the hourly and intraday. Yeah, so really solid trade idea here in Euro Kiwi, in my opinion. Dollar CAD. Mike's asking about dollar CAD. Awesome. Okay, so this is one I actually wanted to look at too. I forgot. I'm glad you asked it, because this is one that, we're kind of between the short-term slopes, right? So with dollar CAD on the daily chart, first of all, I do think that we have been working with the right slope. You could look at this one over here, right? Okay, in which this one was crossing through here, through these lows. I've been going with this one, and again, it's the lowest close, okay? And as far as I'm concerned, it did describe price action slightly better, okay? You could draw sliding parallels off these, and they cross these right here, for example, okay? And they crossed up through here too. So, I'm more interested, I guess, in this slope than this slope. Also, a very general rule too is that if you have the decision between a very steep slope and a not so steep, a flatter slope, a lot of times it's the flatter one that ends up working out better. Okay, it's not to say that you totally forget about this one. All right, but the flatter one too. Hold on, the flatter one too. What you end up having is you'll end up having parallels that would come in at those levels anyway. Okay, so you can see what I mean with this right here. It's a very good description of what was going on. All right, so getting back to the short-term chart, in any case, we had a pretty big deal here with dollar CAD, breaking above this line, right, this median line. All these flat kind of lows down here, you get the potential for a bigger move higher at this point because you do have this more or less double bottom in place, I guess. But any dip with dollar CAD, I think you're going to want to find support, and that's where we go to the short-term chart. Is right here, short-term chart, dollar CAD. So there were two pitchforks that we were really looking at, right? One was this one. This is the one I had posted the other day. Mark had put one up that was like this one right here. Okay, I am not saying either one is right because I don't know yet. All right. The reason I'm following this one, the bigger one, I should say, I'm following the bigger one because, again, if I take a sliding parallel from this, okay, and I take the slope and I put it off this low, you can see that there's obviously some really good stuff going on around that line. Okay, had it here, almost here, breakout really was through it. Okay, so I might be watching this line now for support. All right, and depending on when we get there, if we consolidate sideways into it, that's almost like the best type of one to look for. If it just kind of goes like this into tomorrow and ends up holding above here, might give you like a triangle to take a quick trade higher, a little burst higher intraday. If we break through this, then we're probably looking a little closer towards back towards 120.75 or so. All right, we'll be looking for a confluence of old support or old resistance and providing support potentially, and then this new upper parallel. Right, and you obviously have a lot of trading around the median line too, right? In fact, this little high this afternoon actually smacked it perfectly, but there's a lot of trading around it. Okay, so for me, this actually describes the the price action near term fairly well. That's why I'm following it rather than the other one, at least more closely. It's not to say I'm going to dismiss this one. I'll keep this one up. Okay, I'll have it like grayed out, real light, just so I know it's there. And if I start to see something happen there, then sure. Right, but remember, this is also a spike. Don't really necessarily like to draw off those spikes all that much. But yeah, I hope that helps. So to answer the question, Mike, dollar CAD, I like it higher into the mid 23s. As far as getting in on a trade, see how it trades overnight. If we consolidate sideways and we into this line tomorrow during U.S. session, then you might be able to take a quick move or quick trade higher with a tight stop down here. Say if it's trading 22, you might be able to take a long with 22.60, 22.65 stop and target 23.80. If we break through this thing, though, then that would kind of delay looking for any sort of support to get long until probably 120.90, maybe closer to 120.75. Okay. All right. Okay, so that's it for me today. I hope that helps everyone. I really appreciate you guys and gals checking us out here today, visiting the webinar. I'll have it archived. We'll continue to watch gold here. This is the gold chart. This thing, I don't know, man. Gold can't catch a break, can't catch a bid. It's sitting at support. It's where you would think it would. It's finding low where you would think it would if it was going to go higher. Okay, 1200 right here, right? But it's not doing a whole lot. Crude strong. The dollar's slightly down. Gold can't catch a break. So even bonds are up. I think bonds are going to rip. I think bonds are going to rip up to 159, 160 before they come off again. I've posted some of those charts lately. All right. Okay, so thanks a lot. I'm going to get this archived, and everyone have a great rest of the week. Most of the times these webinars will probably be on Wednesdays, right? But the reason I did on Thursday today is that we had minutes yesterday, and I hate doing the webinar before something like minutes, Fed stuff, because you never know. Stuff could just change, then everything I could have said could just be worthless, right? So, when we have stuff like that on Wednesday, they'll be on Thursdays, but it's always up on the site when they're going to be, all right? All right. Take care, everyone, and thanks again.